Hey, good morning, everybody. Good morning. Just getting the day started here. Man, this is crazy. So I just got an email. I just got an
Good morning,
email.
everybody. Good morning.
I got
Just getting
some
the day
feedback.
started here.
Let me turn that off. Yeah, so I just got an email from a REIT that I owned, or a REIT that I was invested in. It was a non-traded REIT, so you couldn't buy this on the stock exchange. This was something you had to go to the website in order to buy. And I just got the email, so I put in a redemption request probably months ago, right? And there was nothing in it. Like I wasn't really like investing in it. I put just I think it was like it started with $1,000 like years and years ago just to see how it would play out. And I just got the redemption email saying it's been approved, and it is almost insulting to read. Yeah, it's almost insulting to read. So I'm in the dashboard right now, just kind of like looking around. I just want to see some stuff. But basically, they said that they were only going to give me like 19% of what I put in, and then they dropped the NAV. Oh my God, it's so bad. Yeah. Wow. This is embarrassing. Totally embarrassing. I would never put my money with these guys ever again. They definitely just dropped the NAV too. Because I remember looking at this NAV not too long ago, and it was doing fairly well. But who do? Yeah, let's take a look at it. I'll let you guys peer into this. All right, so this is Realty Mogul. So Realty Mogul is a non-traded REIT. Let me put this at the very beginning of the news segment. So this is a Realty Mogul. This was a non-traded REIT, and some time ago, I just put some money into it just to play around with it. I had invested in Realty Mogul and in Fundrise. Now, Fundrise, uh, I put a ton of money in there, and they gave me a pretty decent return, all things considered. And I got the money out like fairly quick, within a quarter, within 3 months, I got my money out at full redemption. Meanwhile, Realty Mogul, they're telling me they're going to give me 19% of what I put in so far. And then over the next preceding quarters, they're going to give me, probably more later. But this is ridiculous. It's $1,000, guys. You guys can't redeem for $1,000. That is so crazy. This is why you have to be careful when you invest in these non-traded REITs. This is why I prefer public REITs, to be honest. But anyways, let's take a look at Realty Mogul so you guys can see. So hey, what's up, G bro? Hey, welcome back. Yeah, so I'm just going over this this non-traded REIT. You can't buy this on the stock exchange. You have to go to the website and register. And long story short, I basically bought in, and yeah, now it's taking some time to get money out. Like this is, and I didn't put a lot of money into it, but man, this is embarrassing. Anyways, let's go down. So explore select real estate opportunities, go beyond stocks and bonds, blah 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 blah. Let's take a look at some investments. Hopefully it doesn't bring me to my dashboard. Yeah, so these are, oh man, no, these are syndications. Yeah, these are real estate syndications. These aren't the REITs. But this might make for a good video for us to take a look at some point. Um, so yeah, they got the Mogul Realty Income REIT, which pays monthly, and then they have the Growth REIT, and this is the one I was a part of. I'm surprised the Income REIT has more money than this one. I would assume people would have went with this one more. But yeah, let's take a look at this and just see what's inside. So I put $1,000 in this like years and years ago when I really started getting into REITs, and I put money into Fundrise as well. And honestly, I mean, long story short, I'll just put the end at the beginning. I would have rather. I'm glad I went with Fundrise because Realty Mogul is absolutely insulting. So, anyways, this Realty Mogul apartment growth REIT. I'm not gonna say they're bad stewards of money, but I will say that like this is embarrassing just what they offered. Yeah, G bro, this is not offered on the market, so you'd have to go to realtymogul.com. This I would not even recommend this. All right, I would, depending on a lot of things, I would not recommend this. Um, but yeah, we can get into that a little later. Yeah, we can get into that a little later. But anyways, minimum investment $5,000. It used to be like 500, and then I think because they're competing with Fundrise and Fundrise is killing them. This is why they increased it to $5,000. They give you an annualized dividend rate or distribution rate of 4.5%. So it's not bad, especially for a REIT. They're going to be paying you quarterly, and they invest primarily in multifamily. Um, so yeah, just going down, the hypothetical $10,000. Yeah, it would be worth only $12,000. Oh, that is so bad. But real estate, like I said, it's been and I've said in past videos, it's just been taking a ass beating. See their asset value, the net asset value, the NAV, which is basically a combination of all their real estate, and then they apply some mathematics behind it, and this is how they come to their NAV value, right? Total shares outstanding, and then they apply that against the total value of their real estate. It's obviously went down. This used to be like $10, $12 or something like that. So, oh snap, it's James. James, what's up, brother? Man, I'm glad to have you on the live. Yeah, for those who are watching, James is part of the part of our community that we got. So, hey man, appreciate you joining the live. Yeah, I'm just talking about Realty Mogul. I got a segment of stuff to go through. So, anyways, yeah. So, anyways, some time ago, I had put money into this, and I was like, you know what? Let me just try it out. And I'm glad I went with Fundrise instead, because earlier this year, or well, not earlier this year, late last year, I was like, you know what? Let me just get the money out, because every time coming around tax time, I have to put in that 1099 div, and it just adds additional costs, right? So I'm like, let me just get it out, so I don't have to worry about it. It's not going to be an extra cost for me, and I don't really like invest in this thing. I don't really keep track of it, but you guys can see from here. And I hope it doesn't show. Yeah, so this was it right here. So I just put in like $1,000 a very long time ago. And yeah, 2018 is when I started. 2018. All right, so I started in 2018. I bought 136 shares. So the NAV right now is terrible, right? It actually dropped quite a bit. My current investment value is $1,121. What a joke, right? Annualized distribution rate. They have kept up with the distributions, so I will give them that. They definitely kept up with the distributions. It has been quarterly. I don't recall them ever missing a payout. And if they did miss a payout, they always made it up in the next payout, right? So I think that was more specifically towards C19. So the total current invested, and that's with dividends reinvested or distributions reinvested, 1380, right? Yeah, here's the distribution rate, or how much money I reinvested. So just to get this money out, right? Just to take a full payout. They sent me a email, and I think maybe we could look at it right here. No, they didn't show it here. Well, it's in my email. I don't want to go into my email and show you guys because it's my email. But I got an email saying that they're going to pay me out 19% of this, right? And then over the next preceding 3 quarters, they'll continue to pay me out a little bit each time just to get this $1,300 out. Like, what a joke. What an absolute joke. Like, this is horrible. I'm so glad I went with Fundrise. And I knew something, like when I started investing into Fundrise, I was like, this is going to be a better bet than investing into Realty Mogul. I'm not saying Realty Mogul is bad, all right? Don't get that twisted. I'm just saying, like, I knew the liquidity was with Fundrise. In case I wanted to get my money out, liquidity was there. These are non-traded REITs, real estate investment trusts. So when you invest in any of these things, your money is tied up, and if you want to sell and get your money out, it's it's not going to be fast. It's not going to be fast or easy. You have to sign some paperwork, you have to submit it, and then you have to wait almost a quarter, like 3 months before you could get your money out. So it's not as easy as people might think. This is their biggest competitor. At least I think this is their biggest competitor. Now, FUNDRISE, I was happy with FUNDRISE. Obviously, they offer a couple different things, and I'm not sponsored by them, but I'm just telling you guys like up front what it is. If you wanted to invest in real estate that wasn't on the stock market and you didn't want to pick and choose, I would recommend a FUNDRISE. But just you have to know that there's risk with this. You know, not just risk, but also there's problems because if you try to get your money out, it's going to be a little harder. But they have really improved this platform quite a bit. They really improved this platform a lot. Like you used to, like now they offer private credit, which I really like. This is awesome. Like this is by itself is great. And then they have the venture capital stuff, so they're investing in like, you know, like look at these companies that FUNDRISE is invested into. So you could be an investor in Databricks, Anthropic, Canva, Vanta, right? Omni, Database Labs, I'm guessing, or DBT Labs. You can be an investor in these tech companies. Now, this is venture capital, so you got to understand that, you know, statistically speaking, most venture capital have like a high failure rate because they're investing in super high risky companies, right? Especially tech startups. So sometimes they don't pan out the way people want, and then, you know, investors lose money. But it's cool that FUNDRISE ventured into this realm. I really like that. The private credit piece is nice. The real estate stuff is obviously nice. You can invest in like they have a couple different funds in here. Yeah, they have the flagship fund. Yeah, this is really huge in real estate right now. Multifamily, which is something I always like to invest in. Industrial, which is, you know, I'm pretty bullish on industrial as well. But yeah, it's just, see, James Mag says, interesting. I heard of FUNDRISE, but never looked into it before. Yeah, I mean, FUNDRISE isn't bad. I mean, I like it. I don't like, I because I moved all my money out, like I wanted to consolidate all of my accounts. I consolidated all my accounts to a single platform, M1 Finance, and I already was investing in multifamily and logistics and all that other stuff, or warehouses. So I was like, FUNDRISE just didn't make sense for me. But the platform itself, the company itself, everything from FUNDRISE, I would highly recommend. If people wanted to, look into investing in real estate indirectly, and they didn't want to learn, how to invest in REITs or any of that stuff. This is like a done for you kind of platform. So I would recommend them, not for sure. But yeah, for those who are just joining, I was just going over how it's going to take, because I invested into Realty Mogul. This is where this all started. And they have a couple REITs, right? They have the income REIT, and then they have the growth REIT, and there's different strategies for these two, right? I invested into the growth REIT, and again, just long story short, I would just put $1,000 like way back in 2018, at the end of 2018. They've never missed anything, but just to get $1,200 out or $1,300 out is going to take almost a year. Like, this is ridiculous. Whereas with FUNDRISE, I was able to get my money out in 3 months, like full share redemption. Right, because when you buy into these non-traded REITs, these non-public or non-traded REITs, you buy shares just like you would on the stock exchange, and each share is valued differently. Right, each share is valued at whatever the whatever you buy into and all that other good stuff. So, yeah, I mean, yeah, that's it. I just got that email and I was like, you got to be kidding me! Like, this is horrible. Like, how can a company with freaking $267 million in assets, they can't pay out $1,300? Like, you gotta be kidding me, man. So now I'm gonna get another tax document for the whole year, and that's just annoying. Yeah, so maybe I'll do a video, like an actual in-depth video, because I haven't done any videos. I've just been doing lives this whole week. Maybe I'll do like an in-depth video between Realty Mogul and FUNDRISE, because I've invested with both. I definitely have some insight into both of them, and I think it would be educational. I think a lot of people would probably like these instead of just looking for REITs on like the stock exchange. Let's see. Yeah, they also did something else over here. They well, I'd have to log in, but you can actually pick and choose what to invest into with Fundrise. Last I checked, I don't know if they changed it since, but they used to have a couple different REITs, and then they used to have a couple different funds, and you could actually pick and choose and build your own, your own investment. Right? It was really really cool. And you can even invest in private credit now, which, I keep talking about this. I keep talking about private credit because this is going to be the thing in 2025 and 2026 for sure. They're going to figure this out because there's like debt. The debt markets are too expensive right now. To get any kind of debt is expensive, right? So there's companies like Fundrise or private equity or institutions that are coming out with these debt funds, these debt ETFs, these things like this. The debt ETFs aren't out yet, but they will be. This stuff like is high income for like high income, for income focused investors. Basically, what these funds do is they go out, they raise a bunch of capital, raise a bunch of money from investors, and let's say they raised $1 billion, right? So they can start loaning out money to companies, to businesses, to real estate, to whatever. So and they can charge interest on top of that loan. Like this is really, really cool. This is almost similar to like an MREIT, like a mortgage REIT, and mortgage REITs are notorious for paying super high dividends. I say notorious because, while they might pay super high dividends, they're not free from dividend cuts or suspensions or even, complete share declines. So it's just something in the back of my mind is always what I'm thinking about. But yeah, this private credit stuff I think is going to be huge this year if they could figure it out, because if they create an ETF out of it, if they create an ETF version of it, if I put my money into this ETF and they loan out the money, and I decide to liquidate and take my money out, like how does that work? I think I think in the backgrounds they're working with the SEC, like certain credit funds. I know, I want to say iShares was one of them, one of the ETF providers that was looking into this, and they're working with the SEC to like work on the regulation of what makes sense, because they still have to protect investors, right? They still have to protect investors. But yeah, yeah, maybe I'll do a video on this or something. I'll take a look at this. So yeah, one article I came across today was gold settling at record high as tariff fears continue, because our president, our current sitting president, he was talking about implementing tariffs come February 1st on Canada and Mexico. This is still in the air, but this is like fresh rhetoric. He just said this, right? So now it's riled up a bunch of markets. Everyone and their mom is like looking into this, like how's this going to affect, the stock market and everything else. So gold actually settled higher. And I saw a article not too long ago that gold actually outperformed the S&P 500. Gold outperformed the S&P 500 in 2024. And we could see that right here. I put gold, for any of those guys who are, Austin Power, Austin Power fans. I love gold. Anyways, all right. So yeah, gold actually outperformed, which is crazy. Not by much, but it still outperformed. So that is interesting. That was interesting. So, hey Troy, what's up, man? Welcome to the channel. Well, I think you joined. Yeah, you joined last time. Yeah. Welcome back. Yeah. So just gold is outperforming the S&P 500. Of course, if you zoom out, gold is always underperformed for the most part. But I just thought this was interesting, and this just goes to show like the whole macro environment, kind of what's going on. The threat of tariffs and all this other stuff, and what's going to happen. I think that probably riled up a lot of investors to move their money into gold. And then there's always this talk like as soon as this is what I mean when people mention, like I always talk about like the Elon Musk and Tesla thing. Whenever Elon used to text on X or Twitter or whatever, like Tesla would either spike or really drop down. Like it was always an extreme. He could put out a tweet saying that he had Chinese food and Tesla's stock would drop, right? Like it's just something stupid like that. But this is like Donald Trump's version of that, right? Whenever Donald Trump speaks, you know, I mean, he's the president of the most powerful country in the world. I mean, let's not take that away either. But anytime he speaks, whether he's just talking out loud, like the markets immediately react, right? They immediately react, which I think is funny as hell. Because he might not move forward with the tariffs. I mean, Canada and Mexico are our two biggest trade partners, and a 25% tariff on that. I think he's trying to get them to basically move some of the manufacturing into the United States or something. Because, I mean, there was a video of him saying, "Oh, south of the border, you know, they're not taking care of the migrant crisis, and you know, drugs and fentanyl's coming into America." And then they're like, "Oh, what about Canada?" He's like, "Well, Canada, you know, same thing." Like, like, come on, dude. I don't know. Maybe fentanyl's coming from Canada. I don't know. I don't see Canadians migrating to America, to be honest, or hopping the border. I don't know. I could be wrong, but yeah, 25% tariff on Mexico and Canada, and then there's going to be a higher tariff on China. Yeah, so we'll see what he does with China, because whenever that pops off, if that pops off, that's going to be a big one. I think that's going to be a real big one. And again, the Federal Reserve, is waiting to see what the president does. That's why they basically paused, you know, the interest rate, changing the interest rate, because they're waiting to see what this current president is going to do. Right? Is this policy going to be inflationary? Or are they going to be, you know, deflationary? What are they going to be? You know, are they going to are they going to make the cost of goods and services go up, or are they going to go down? So we're all kind of just waiting to see what happens. I don't know. I have no idea. And then you still have, you know, the conflicts happening in the Middle East and the conflicts happening overseas in Europe. There's stuff happening in Southeast Asia. So it's just, yeah, it's an interesting time to be alive for sure. So yeah, again, just going back to this, it's funny. It's just funny to see something like this. But yeah, I mean, you can even take a zoom out. And for those of you guys who don't know this, I would always recommend you guys take a look at something like this, Portfolio Visualizer. It's a great tool. It's the backtest portfolio tool. It's they used to let you do it from like the 1990s, but now they only capped it, so you can only get like a 10-year range. But still, it is good to see, because there's a lot of people, you see it in the wild, but people will be like, "Oh, this thing is paying me, you know, 20%, you know, dividend yield annualized, all that other good stuff," and then you're telling them, "No, it's actually underperforming the S&P 500," and they're like, "No, it's not." So then you show them something like this, and they're like, "Oh," you show them that you know, yes, it is underperforming. What are you talking about? But I don't know. Let's take a look at let's back test this a little bit more. So we'll do, I don't know, we'll just go 2000 as far back as we can. We'll do 2025. We'll do year to date, $10,000 cash flow, nothing, rebalance. No leverage, reinvest dividends, display income. All right, let's take a look at what this looks like. So yeah, again, when you zoom out a bit, it looks like the S&P 500 just completely annihilates gold. You know, but gold has always historically been kind of like a very stable asset class. I don't invest in gold, but you could buy a gold ETF if you want to maintain that liquidity. Just know that there is a tax consequence on stuff like that. People alternatively will buy jewelry or gold, like gold bars, and then they'll just go to sell it to like a gold jeweler, right? But you have to think as well, you know, the gold jeweler people, you know, they want to make money off this stuff. They don't want to just take it at spot price. So if, like an ounce of gold is, I don't know, $100, right? They're going to want to pay $90 because they want to make money on the spread. They want to make money on that. They want to make an extra $10, right? So while you might, you know, you might walk away with, you know, a gain depending on when you bought that jewelry or those gold bars, or what do they call it? Ingots, I think. Ingots, those little tiny ones. It really all depends. But I don't know. I would always opt for jewelry versus actual physical like gold ingots or bars. I don't know. What do you guys think, man? We're just here chatting, just chit chatting. Let me know what you guys think in the chat, because I'm over here just going through stuff I'm looking at. So you guys, I don't know if you guys had a chance to look at that video. How Donald Trump, and of course it was a little clickbaity, but basically how Donald Trump rug pulled some people. So I didn't know there was an actual video. I don't know if this is the video tied to tied to my video, because I only showed a screenshot. Let me see if I can pull it up here real quick. Dang it. No, I can't. But basically, there was a screenshot of a lady who was upset that her husband had lost, $500,000 on DJT. I don't know if this video is a part of that same screenshot, because they both posted to Reddit. One of them could have been fake, but this is the actual video. What's up, Far Out? Flip gold and silver into fiat and invest to fiat. That's what I'm talking about. But here's the actual video for you guys.
What?
It dropped.
What? Oh, my life is ruined. My life is ruined. My wife, she's gonna leave me.
My wife is gonna leave me. That's crazy. It's hyperventilating. 429, negative 429.
I'm sorry, Grandpa. I'm sorry, Grandpa.
That stuff is just so sad. It's a wealthy life. What's up, brother? Welcome back. No, we're just talking about a bunch of crap, man. But yeah, you remember? I don't know if you saw the video that I made about DJT guy lost 500K. I didn't know there was a video tied to that, so I found the video, and apparently, yeah, it's real. Like apparently, yeah, this is real. This dude lost 500K. This is crazy. Yeah. Jeff Welch. Yep. Deep breath, Mr. Baghead. Hell yeah. He's holding the bag at this point, man. He must be hurt, man. This poor guy. I can't even imagine. But the comments had me rolling. Like, I hate to see crap like this because it's sad. But, when you're on Wall Street bets, I mean, you see it all the time. You see the loss porn, is what they call it. And this is funny. Like, this is just hilarious. This has to be a fetish. This is grandpa looking down. Your gramps in heaven watching you lose your entire inheritance on DJT calls. Oh my God. Think about it like this. Let's just say, let's see if I can get this a little bigger so you guys can see it. There we go. Think about it like this. Let's just say 500K is half his money. You only wasted 500K of your grandpa's money. Oh, that doesn't even include his time spent interviewing, his daily commute, or the time spent towards attaining higher education. Well done, man. Oh, these comments are so brutal. Why would you buy the tip of such an obvious pump and dump? Disrespect to grandpa for real. You're going to gamble what he worked for his entire life. Put this in stocks and you could probably retire. Anyways, thanks for playing. Imagine working for 50 years and this little shit loses it all in a day. God damn. Oh. Yeah. Alien says buy dividend paying stocks or an ETF and just reinvest 100%. Again, it may not be sexy. It may not make you a millionaire overnight, but you're not going to lose all your money either, right? You'll make money. Jeff Welch says, Gramps didn't fight the Huns in World War II just for you to YOLO your whole inheritance. Oh my god. Wendy's careers. Oh man. Oh my god. I didn't even read like all of these. I glanced them and I started laughing. Oh my god. I'm retarded. Me do trader. Oh my god, trader. Oh my god. You'll become a Wall Street Bets legend. Congrats. To the front page we go. Oh shoot. Oh man, look at this right here. And this is the OP. So this is the guy who lost the money. Holy crap! Negative $570,000. Oh my god. Oh man. Nope. I would have been left. Like if like my wife had lost something like that, I'd be like, I think I'm gonna try my hand at being sing. Oh man, I shouldn't say that. My wife will kill me. She will stab me with a chopstick. Anyways, yeah, generational trauma. That is funny. Oh my god, yeah. When I found this video, I was so surprised. This was 9 days ago. That screenshot when I did the video was 3 days before this, or 3 days after this. So, um, yeah, it's crazy that this is actual. Like this is real. I should have known. I should have just went straight to Wall Street Bets. I was like, this has to be a Wall Street Bet thing. But yeah, man, that is just so sad. That is absolutely sad. Um, we kind of already skipped the news segment piece about this, or we already touched on it rather. But yeah, Trump says tariffs on Canada and Mexico coming Saturday, February 1st, and he's deciding whether to tax their oil. This is going to be crazy. Like I said, this is going to really rile some markets. I want to see what happens come Monday. So President Donald Trump said he's going to put 25% tariffs on Canada and Mexico, but he's still considering whether to include oil from those countries as part of his import taxes. What do we even import from Canada? Um, Canadian imports into U.S. Paper, $6 billion. Damn. Okay. Cereal. All right, I can see that. Cereal, flowers. Okay, foods, animals, veggies. All right. So I mean, nothing. I like trading economics. I feel like this is probably way more accurate. Let's take a look at this. So imports from Canada. Oh my God. United States imports from Canada was $429 billion during 2023. That's crazy. And we're going to put a 25% tariff on this stuff. Oh, yeah, we actually import quite a bit. The biggest one being mineral fuels, oil. Yeah, oil. Okay. Oh, wow. All right. Well, hell, I didn't know that. Wow, you learn something new every day. Jeff Welch says, "I work in a building. We get a lot of products from Canada, not only just lumber, but other prefab building products." Oh, you okay? You work in like construction, Jeff? Is that it? Like you work in construction? That's crazy, man. That's crazy. Yeah, so we're we're gonna slap on a 25% tariff on all this stuff. Let's see if we can find one for Mexico. Mark K, welcome back. Mark K's in the house. U.S. goods imports from Mexico totaled 454 billion in 2022. So let's look up trading economics. I just found this website, but I really like their stuff. Let's see. See, they don't have drugs in here. They really should have like drugs, like fentanyl, you know, things like that. The other things we import. No, I'm just kidding. All right. Anyways, vehicles. Yeah, because there is some manufacturers in Mexico, some American manufacturers actually in Mexico. So I could see that. Electronic equipment. Okay. Um, we import nuclear reactors from Mexico. All right. Hey, I'm with it. Yeah, I could see that. Commodities, fruits, veggies, probably animals somewhere in there. Yeah, foodstuffs, yeah, live animals. Yeah, I could see that. Fur skins. Okay. All right. So just all in all, um, yeah, all in all, we're basically gonna put a 25% tax on $1 trillion. Let's just round that up. Let's see. Is that a trillion? No, that's a million. 10, 100 billion. All right, trillion times 0.25. Oh, whoops, not whoops. I did that math wrong. Sorry, guys. I just learned numbers today. All right, hundreds, thousands, millions, billions, trillions times 25%. What? I was right. Okay, I'm doing something wrong here. 100,000, yeah, million, billion. Yeah, $250 billion worth of tariff revenue for the American people. I mean, I guess yeah, that was such easy math. I don't know how I didn't figure that out. It's early, guys. Give me a break, all right? I'm still working on my coffee. So anyways, with all of this news going on, right? I was like, let me just take a peek. Let me just take a quick gander over at the US 10-year treasury. And of course it spiked. Why would it go down? Of course it spiked. Right? Again, markets react to everything, right? So when Trump was talking about this, I'm pretty sure this is when this really reacted. So now they're pumping up the 10-year treasury because 25% tariffs on our trading partners to the north and south of us, inflationary, right? Very inflationary. So that's going to cause a 10-year to rise, which is going to cause real estate to go down, right? Or put further pressure on real estate. So no surprise there. I was not surprised one bit to see this. As soon as I read that article, I was like, oh, come on. You got to give me a break. That is crazy. Yeah, so yeah, Fed is going to raise back to 5.5%. Says it's a wealthy life. I almost agree with that. Like we're probably going to go up in interest rate. That would suck so much. I'm not going to even lie. But again, I mean, looking at the federal funds rate. Let's see. What is it? What is this website? Trading Economics. Yeah. Where is it? It might be this one. Nope, it is not that one. Oh, here it is. Yeah, just like looking at it, I it would like it's happened before. You see, way back in the '90s, it happened where they raised the interest rate after lowering it after just a year, 2 years. It looks like. So could it happen? I think it's likely. I think there's a possibility. I'm not going to say whether it will happen or not, but I think there is a possibility, especially if inflation continues to stay like sticky and stagnant and not moving up or down, or it might even increase with again with this whole tariff business. Mark K. Eugen, have you committed to Misty? Ah, hey, let's take a look. Let's take a look, all right? Let's take a look. We'll find out if I did or didn't. I'll show you guys. If I can remember my password. Oh, there we go. All right, you guys already know I like to do shit live, so we'll just show you the portfolio live. So what do you guys see right here? I made it. I did it. I'm one of you guys now. I'm one of you degenerates now. And I already lost $37. I already lost $37. Thanks a lot. All right. Thank you guys for helping me make the right decision, invest money and then immediately lose it already. Thank you so much. No, but yeah, I made the order yesterday. Yeah, so now I'm one of you degenerates that are like a Misty lover. So maybe I don't know. I'm waiting honestly on like a cash out refi or something like that to happen. And then I do want to dump more money into Misty. So there was another ETF I was looking at. I'm not even front. There was another ETF I was looking at. And I was really thinking like what to do, right? BTCI. Yeah, the NEOS BTCI. And so this one, same expense ratio, a much lower distribution rate. And yeah, dark side yield max investor. Yeah. I'm a trader now, right? Anyways, I was looking at this one because this looked interesting, right? I really thought like I was gonna go with this one over MSTY, but then again, like I was really thinking MSTY is investing in MSTR, and I already did the whole video about MSTR being tied to like Bitcoin's price. So indirectly, you're investing into Bitcoin one way or the other, right? This BTCI, what they do is they invest into oh my god, there's an ETF out there that they actually do cover calls against. Which one is it? I forget which one they do it against. Yeah, the VanEck Bitcoin ETF. Yeah, so they do it against this one. I did a video on this one as well. Yeah, so they're doing basically calls against this. Look at this, almost $2 billion of assets under management, right? Whereas this one, I think this only has under a million net assets. Yeah, this doesn't have much, right? 73 million. This does not have much, but this looked interesting. So I was considering this one over MSTY, but I'm glad I went with MSTY. Only because MSTY again is you're indirect. They're gonna get rid of their software stuff. I guarantee it. I don't know why, but MST like they're losing money on their software. They're not making money. They haven't made money in a long time, and they keep just buying Bitcoin like a bunch of degenerates. So their whole stock is tied to Bitcoin. So if you want to invest in Bitcoin indirectly and make income from it, then just invest in MSTY. That was my thesis. That was my idea, anyways. So Jeff Welch says I'm looking at the Glint app and the IBIT ETF to gain exposure to gold and Bitcoin without having to work hard to make it happen. Yeah, I like the IBIT stuff. I took a look at them too. I would definitely go with IBIT over Grayscale or IBIT over most other ETFs because this has the lowest, not only the lowest expense ratio, but this is like it's actually tied to like the price of Bitcoin. So the iShares Bitcoin Trust ETF seeks to reflect generally the performance of the price of Bitcoin. So that's what I really liked, and they work with Coinbase, and Coinbase is the custodian for their crypto. So again, like it just makes, to me, it makes more sense. The investor is getting more direct exposure to it. So yeah, Bitcoin right here. They actually hold Bitcoin. Then they have Bitcoin USD, and then some cash. So this is why I would prefer this one over most other ETFs because just for that simple fact. And I mean, if you look at the assets under value or net assets of the fund, $60 billion, like 60 billion, right? That a lot of people are putting their money with this fund. So It's a Wealthy Life says, I think you may be surprised with Misty because I feel Bitcoin will trade sideways because of the government spending is going to slow down. And with rates steady, the cover calls may be juicy. Hell yeah, that's what I'm talking about. You want sideways trading for sell. Yeah, yeah. You want a sideways market. Basically, for those who don't know, when we're talking about sideways markets, we're talking about like they remain flat. Like there's nothing really happening. The best the you know the best example I can think of for an ETF, and I mean, Dan, jump in and let me know if you have a better example. But if we look, man, I hate when this Thai stuff comes up. But yeah, like this is trading sideways right here. Like over 7-8 years almost, it just traded sideways. Like you didn't really make a whole lot of money, right? This is sideways trading. This is almost a decade. I mean, you could look at the Nikkei, um, which is a stock exchange in Japan. I mean, this really traded sideways. Let's see, because they had this period called the lost decade. Maybe this is it right here, like from 2000. Yeah, like from 2000 2012. Like they didn't make, no one made any money, like zero. So yeah, you want cover calls in a sideways market. And again, just to take it a little step further, you have bull markets, you have bear markets, and then you have like sideways markets. The Glint app lets you buy into gold, but you get a debit card for spending it. I had Glint, but it was through my employer, my old employer, anyways. Yeah, it was through my old employer. Look at Ford. Okay, yeah, Ford might be it. She. So this is 2008, 2000. Yeah, so 2009. Um, yeah, I mean, even if you bought way down here, even if you bought like at the bottom and you held it for 20 years, that's still 100% return. That's still really good. Yeah, I mean, I guess, yeah. I don't know what their dividend situation's like. I see it's probably 5.91%. But I don't know what their, like, maybe that probably boosted their return. Man, I got to do this because looking at Thai stuff is like hard. Yeah, I mean, yeah, I guess it could be considered sideways. I'm sure the dividend yield, because I'm sure the dividend yield probably helped this a lot. Probably at least boosted the return a bit. So yeah. Jeff Welch says, I don't know what SCHD is doing right now, but that ETF went sideways for me for 3 years before I got rid of it in June. Oh no. Let's take a look at SCHD. I'm a big fan of SCHD. I mean, all things considered, I'm a huge fan of it. I would say this is probably the easiest ETF to get into if you wanted to like invest in dividend paying stuff. But yeah, I could see, like, look at this, 14% over almost a 5-year period. Well, 4-year period. Yeah. And meanwhile the S&P's returned a lot more. QQQ's returned a lot more. Yeah, I could see how this would be trading sideways. I mean, this looks like it's trading kind of flat. Like, unless you took advantage of these big dips within the last 5 years, unless you took advantage of those dips, yeah. See, this looks like it's sideways. Yeah, yeah. So Mark K says Spider and VU are similar as the asset profile. However, VU has been upward trajectory, not trading sideways. Yeah, but VU also didn't come out in the 90s. VU came out in like 2004, I think. Yeah, they came out or 2010, whereas Spy came out in the 90s. So that's why this has a longer track record. All right, this just has a longer track record. $14% over 5 years is trading sideways for me. Yeah, that's a good way to look at it. The difference is that BTC volatility premium is insane. I bought into high in the. Oh, okay. All right. I see. Danos, hey, brother, welcome. Thoughts on JEPI or JEPQ? Well, let's take a look, guys. Why not? Got nothing but time over here. So JEPI and JEPQ, they're fairly new. They're fairly new ETFs, within the last, I think, 2 years, 3 years. So if we look at JEPI, because JEPI was first, so they do pay that good yield. JEPQ, I think a lot of people, because this was when cover call ETFs really started making waves, and a lot of people were with QYLD. And then JP Morgan's premium income ETF came out with JEPI, and then a lot of people started piling into JEPI. And then I guess there was a lot of issues, like people were finding a lot of issues with these cover call ETFs, both QYLD and JEPI, and then they all like migrated out and into JEPQ because people wanted the capital appreciation. Whereas JEPI, it was you weren't going to capture any of that. QYLD was the same. You weren't really going to capture any of the the growth or the gain for the underlying index. But yeah, even this one's still fairly new, but it's performed, I think, a lot better than JEPI. If we look at the dividend yield, and I know this is like such a bad way to look at it because you don't want to just look at the dividend yield when you're looking at stocks. JP Morgan JEPQ, because you want to get a much bigger picture of everything. You want to look at the whole thing and understand what you're investing in. And I'm not going to sit here and lie to you. I don't really fully understand their strategies or how they work because they use ELNs, equity line notes. I got lost in the sauce. I got so lost in the sauce. I didn't know what like all that stuff was. But yeah, I stayed away from both of them. But yeah, almost a 10% yield, 35% for expense ratio. Again, that's not too bad. For a 10% yield over the fund, over the year when annualized is not bad. And their team, their portfolio managers does look, they do look like they have, some decent experience, which is a big deal because you want your fund managers to absolutely be pros at this stuff. The fund assets, 22 billion, so that's good. I would say like if you were going to be investing in more riskier cover calls, there's someone on this channel. His name is Pay Me in Dividends, and I always talk about him. Solid guy. He has a great channel, but he's planning to invest in something like this, like a product like this to bring stability to his portfolio because he's in some really high risk cover call ETFs. So he would do something like this because they have a little more, they have way more holdings. First off, they have way more holdings and it's a little more predictable. So I would recommend something along the same lines. In all honesty, I would look at it that way. If you want to add stability or to your portfolio for like a cover call stuff. And let's look at the other one. Let's look at JEPI. JEPI right here. So yeah, we're looking at JEPI. First thing that comes to my mind is, of course, the assets under management, which is the first thing I like to look at because I want to see how it's doing. Wow, holy crap. Yeah, last time I looked at this, they were like 8 billion, and now they're 38 billion. Holy shit. Okay, all right, so big difference from when I first saw them. 35% expense ratio, again, really good. 7% yield when annualized, really good. Defensive equity portfolio employs a time-tested bottom-up fundamental research process with stock selection based on our proprietary risk-adjusted stock rankings. Results provided an attractive 12-month rolling dividend yield of almost under 8%, and competitively priced. So yeah, I mean this would be a decent product too, but I mean you can't just look at the share price like and again this is all really like surface level stuff, but I mean if you just look at the share price by itself, I mean this right here would have probably turned off a lot of investors, just seeing this and like, oh, it's never going to recover. But it looks like it's coming back up. But again, if we look year to date, let's look at 1 year. 5% return, even with their 8%. Let's call it 13. Let's call it 14%, just to be fair, right? We'll call it 14% return for the year. If we compare that with, S&P 500, and this is how most people do their comparisons. Look, you left almost 10% on the table. You left money on the table. So this is where you really have to think, like, what makes sense for you as an investor? What makes sense for you in your portfolio? Because would you do 50% to, JEPI or JEPQ and then 50% to the S&P 500? I don't know, but that would be something to think about. So I hope that answers that extremely well. So It's a Wealthy Life says, even if you lose in value, they will still write calls for the 10%. Then you have to wait and keep dripping that 10% in. Yeah, you should always be dripping to get more shares. That's a fact for sure. That's nothing. Try 414 to 100 Tesla. Oh, man, I don't know what any of this means, man. It's a nothing burger for me these days. Yeah, I can't do those extreme drops, man. Like even like a 30% drop for me was like a nothing, but I was also in indexes. So that didn't really phase me that much. That didn't really phase me too much. But, because I know it's like 500 companies. Unless all 500 go out of business, nothing's really going to happen. Yeah, this one, yeah, I could see this one being like added. Yeah, I could see this one being added. Once you hold Tesla, you learn how to cope with a 50% drop. Dan, I really hope this is not going to be you in the future right here. And anyone, let's just watch it again, man. Like this is so crazy. Like this is just crazy.
What? Oh, my life is ruined.
Oh my god.
My life is ruined. My wife, she's gonna leave me.
My wife is gonna leave me. My boy's hyperventilating.
My life is ruined. I'm sorry, Grandpa. I'm sorry, Grandpa.
Man, boy lost $500K, $570,000. $570,000. Man, that is just so crazy. That is so crazy. But see, that's the crap that happens, she's gonna leave him because he messed up her party bag. Actually, no, she made that post. And I covered that in my earlier video where she was, asking like how to get him to stop. Like they have 3 kids. And I think he took out $200,000 in leverage, in additional leverage, in order to make this. Like, yeah, PMI, welcome back, dude. Yeah, bro, what the is Indeed? Yes, Indeed. Like that is so crazy. Yeah, look at that. Danos hit it right there. Even if he bought $900,000 worth of JEPI, imagine the money on that. That's almost $90,000, right? Almost $90,000. Well, like 70, I guess, or 60. But still, that would be enough. Like I'm done. I'm out. I'm taking my family to like a low cost of living country, and that's it. Traveling the world. Hell no, I'm done. Like that just blows my mind how people like really YOLO their money like this. Like it's crazy. It's absolutely crazy. I don't know. Ever since I moved to like Thailand, like the cost of living obviously is low. I love like the lifestyle. It's such a great lifestyle. But I don't need all that extra shit anymore. Like having a car. I mean, there's they have the equivalent of like Uber out here. There's a good transportation authority. Uh, I don't really go far. I'm usually just chilling here, either in this office or around the area. Or if I need to go into Bangkok or some other area, I can hop on the Uber, and it's like $3-4, like $3-4. It's ridiculous. And like I don't know. I found through much trial and error that I really don't care about having like Bugattis and Lambos and mansions and shit like that. I don't need it. I don't know. It's my version of a wealthy life, right? If I get to wake up every morning, have my coffee, chat with the boys, chat with the lads in here, just talk about stocks and shit like that, like I'm happy. I'm pretty good. Yeah, they have like gambling addictions. Like it's ridiculous. Yeah, absolutely true. They have gambling addictions. And this is the crap that just is so sad. It's just super, super sad. You could have put it in Misty and and made a ton of money. I wanted to let's see if I can find damn, what is it called? Dividend return calculator. Let's take a look at what Misty might give me if I hold it for 5 years, right? No, we're not gonna do that. Actually, whatever. Let's see. Maybe we can find it. Yeah, there we go. Okay, let's do what's the price right now? $27. Okay, let's do 27. Let's see. Let's drop $100,000 into it. Why not? Let's drop 100,000. Yeah, divided by what? 27. 3,700. We'll do 3,700. All right. The initial dividend yield. Nah, we're going 100. That's according to their website. We'll do that. We'll keep it for 10 years. No, we'll keep this for 5 years. We'll keep this for 5 years. No contributions, no share price appreciation, no dividend increases. Yeah, we're going to drip this bad boy, and we get paid monthly. And maybe we'll even be weekly, right? Let's calculate these bets. Look at this. Look at this right here. Look at that, how crazy that is. In 5 years, they're going to be paying me out $19 million a year in dividends. Oh my God. This is that crap I'd be talking about. Look at this. Let's hold it for 10 years. Guys, I'm a pre-trillionaire. Like, look at this. Almost $570 million in dividends. Dano says, would like to try visiting or temp living in Thailand. Looks awesome. Yeah, Thailand is beautiful, man. I love this place. No, Misty is not sustainable. I don't think it is. I would probably cycle out of it at some point. I don't know when. Whenever the thesis changes, whenever like your investment thesis changes. For me, it's probably going to be it's going to have to do with like something with Bitcoin, like some type of news or catalyst would have to affect Bitcoin in a way that would make me want to get out of Misty, because Misty invests, as you know, in MSTR, and MSTR is basically holding so much Bitcoin that their price of their stock is tied to Bitcoin at this point. Far out aliens, growing life, organic, and PMI. I sense something lurking. If you're a 20-year-old or 80-year-old, you need a high percentage. Oh, you need a percentage in high risk stuff. Yeah, I would agree with that. I would agree with that. Because this is why I don't do bonds. Like, this is why I don't like bonds. I don't think I'll ever be in bonds ever in my lifetime. I don't see it. Bonds to me are just like, they have a place in people's portfolios. But I can't see them being in my portfolio. But yeah. All right, guys. So I'm gonna be gifting you guys Lambos. All right, you're all getting Lambos in like 20 years. I'm gonna give you guys all Lambos and mansions because I'm gonna be making $22 trillion I'm going to be making $22 trillion from my Misty holdings. Like, oh man, this is the crap that really like makes me laugh. This is why when you start doing the math like this is when you really realize like, no, this stuff is not sustainable. This is not sustainable. Not sustainable at all. God. Oh man. Well, guys, that's gonna do it for this stream, man. I got nothing else, man. I gotta get my day started. I gotta hit the gym. By the way, speaking of gym, all right, January 31st. All right, I hope you guys are staying on top of your goals, except for those who are retired, because I know there's a few of you on this channel. But yeah, I hope you guys are staying on top of your goals, man. At least crushing it. We're already 1 month out of 12. Keep on it, man. Keep your foot on the pedal. I actually have been hitting the gym quite a bit, and I'm really happy with that. I've been pretty consistent. I think, well, yesterday I didn't go because I felt like absolute crap, but all in all, I think this month out of 31 days, I only missed like 6. I think only 6 days. So I'm pretty happy with that. So yeah, keep on it, guys. All right. We're at the cusp. We're at that first month. All right. So keep on it. Whatever you got for your investment plans or whatever, make sure you're sticking with it. But other than that, guys, I'm going to head out. I appreciate you guys joining the live stream. Appreciate you guys, shooting the shit with me and just, walking through all this stuff. And yeah, I'll see you guys. Let's see. Today's Thursday, your time. So I'll see you guys tomorrow. All right.